Here. So in today's video, I'm going to talk about the easiest prediction I have ever made, and that is calling out the lumber market. So many times that I heard people say that the lumber duties, the lumber tariffs are going to cause the price of lumber to just go through the roof, and it's going to cause like $10,000 increase to the cost of building new homes. And there was all this dramatic information that was pushed out there onto the mainstream media, completely misinforming everybody that was out there on what it is that's really taking place within the lumber industry. And I was here to try and explain it in a way that you can internalize to make the best decisions for yourself. And when I called out the lumber market by saying that you are not going to find price increases due to the lumber tariffs, that doesn't exist. It isn't going to happen. And now it's proven itself through the Bloomberg article that is sharing that exact information with you. The lumber market or the lumber duties failed to stop the slump in lumber prices. And this is something that, again, I predicted many months ago. In fact, years ago, really, I was talking about the situation we are facing within the lumber industry, and that is the lack of demand. The lack of demand that is coming from home builders due to the fact that they are sitting on a ton of unsold inventory. Until that changes, you are not going to find any kind of dramatic increase in the demand for lumber. There's not going to be any. It comes from the home builders, and if the home builders are sitting on excessive inventory, it's not going to happen. It's not going to happen anytime soon, and I don't predict it to happen anytime soon, but at some point it will. And when that does take place, we are going to find a dramatic rise to lumber. It's not going to come from the manipulation tactics that people want to blame it. They want to say that, oh, this greed and manipulation and, all this effort by the administration, and I shake my head saying, no, none of that stuff is accurate. It is all completely fabricated imagination that people are using to try and, I guess, convince people that they need to pay a higher price. I'm not sure exactly what it is that people are internalizing from it, but when I looked at the lumber industry, when I was looking at the inventory levels, when I was thinking about the mill curtailments that are taking place, I'm like, I was convinced then. There's no way. There's no way that we are going to have a dramatic rise in lumber prices due to the issues that we are facing within the global supply chains. Like, that isn't occurring. I don't know where people get this information from, but it doesn't happen. It comes down to domestic supply versus domestic demand. That's what it really comes down to. You can talk about all the Canadian mills and how much they pump out and how, much it's going to impact our supply chains. It does a little bit. It's much more of an important understanding that we have our own domestic supply, that we have a domestic demand. And when those two come into balance, then you will find prices finding their equilibrium. But until then, you will not find any kind of equilibrium within the price. You are going to find suppressed price, and you are going to find inventory depletion and mill curtailment until the situation changes. And that situation is literally buyer traffic. When home buyer sentiment comes back to a positive level for these builders, they will increase their starts, their permit issuance, their starts, and eventually that will turn into demand for lumber. When that happens, you are going to find that there is not enough lumber within the system to meet any kind of significant demand. I have said this over and over again. I have not changed my tune. And when I hear people say, oh man, you have no idea, lumber prices are going to go through the roof, and they have all this ideas of this greed and manipulation and powers from the administration, and they fabricate this weird story altogether, and I think to myself, you are going to completely miss it. You are not going to know how to position yourself. You are going to fail at this. And as people listen to my information that I deliver, they say, wow, man, you sound so differently than everybody else out there. And I'm thinking to myself, well, how many people have boots on the ground view? Like, not even the big time mill suppliers have the boots on the ground view like I have. I'm working retail. I literally sell 2x4s at a counter and then go put them in a truck, right? Customer drives away with them. That's my position. I live in the Pacific Northwest. I know mill operations. I know loggers, I know truck drivers, I know other retailers, I know distribution hubs. There is no corner of the market that I can't see. Like literally none. And when I hear all these people talk about, oh man, you have no idea on what it is that's taking place, I'm thinking, you don't have any idea on what's taking place. I have it from a first-hand, boots on the ground point of view with the macroeconomics understanding of the monetary policy. There is no way that I'm getting this wrong. None. So again, when I see this article coming out from Bloomberg, it just, confirms everything that I have been saying the entire time. So as people are trying to figure out what it is that they need to do, trying to figure out how it is that they position themselves, and I try to explain, if you watch the lumber market, you are going to see what is really taking place within the economy, because lumber is telling us. See, as people were thinking, oh man, dollar destruction, weakening dollar, failure of the Federal Reserve, hyperinflationary scenario, and I'm thinking, you guys are missing it, aren't you? See, all that hyperinflation doesn't seem, or any inflation, none of it seems to exist in the lumber industry. Why? Did all of a sudden the weakening dollar doesn't exist in lumber? Like, lumber has a strong dollar, but everything else in the world suffers from a weak dollar? Is that what's happening here? Can people explain that? I don't think they can. But if you look at this from the supply-demand side of things, all of it starts to make sense. Everything starts to line up. That this country is a domestically demanded industry for lumber. And when you look at it that way, all the global issues don't necessarily impact that lumber industry. When there was a shortage of lumber taking place during COVID, and the demand for lumber shot through the roof, and along with the prices, that supply chain snapped right back, because it's domestically supplied labor, domestically supplied equipment, domestically supplied energy, domestically supplied product in every way. So there was nothing that was restricting it from coming right back. And when it did, it collapsed the price. Everybody else was thinking, well, what about this and what about that and all these other things? And I'm like, yeah, you can pinpoint all the inflationary scenarios you want. Like, you can pinpoint them right here, this, that, the other thing, all these different products. That's fine, right? Most of the time that came down to a restriction on the supply of it. Came from some other foreign country. Had some kind of input cost that was not necessarily due to the domestic supply creation of the product itself. And when you start incorporating all these other prices into it, then you start finding the inflationary scenario. But that didn't come from dollar destruction. It came from a breakdown of the supply chain. Yeah. And now I'm not trying to convince people that there was no dollar destruction. There was definitely dollar weakening that was happening. What I was trying to get people to focus in on is that not all the products, not all the commodities, not everything was facing the same inflationary scenario. You think about it, you got lumber at $570 per thousand today. I mean, it was trading at $650 per thousand back in 2018. Right? It's like $100 per thousand cheaper today than it was 7 years ago. You got oil trading at what? Less than $70 a barrel? That peaked out at $150 a barrel back in like 2005. It's trading less than 50% of its all-time high. I mean, even silver itself, one of the indicators of being outside of that money supply, that outside of that third-party claim, and although it's an incredibly manipulated market, it still has never reached its all-time high of $50 an ounce that was set back in 1980. Here you got three vital commodities known to man: lumber, oil, silver, and none of them are over their all-time highs that were set even decades ago. See, it's easy to say money printer go burr, prices go up, and just wash your hands of the whole idea and not understand the true macroeconomics that are taking place within the economy. I mean, that's easy to do. You can just blame the Fed. Oh, it's their fault. That's it. That's all I need to know. Just blame the Fed for everything, and that's easy. Just wash your hands of the whole idea of understanding it. You don't need to, right? It's all the Fed fault. And now you can't understand why it is that lumber is cheaper today than it has been for 7 years. Why oil prices are cheaper today than they've been in recent history. You got oil or silver that has never achieved its all-time highs set back in 1980. It's easy to blame the Fed for dollar destruction, but then it's hard to explain why those particular items, three of the most vital commodities known to man, are yet not achieving their all-time highs. Because it's not what everybody seems to think. See, it's easy for me to call out the lumber industry if I don't blame the Federal Reserve for everything. I can truly look at the market for what it is. I can see the supply-demand side of things. I can see how it is that the dollar is not necessarily impacting the lumber prices due to its weakening effects. It's easy for people to say that, but it's very difficult to understand it when it doesn't seem to happen in certain areas. You just say, oh, well, that's just because I don't know. Right? That's the only answer you'll have. Let me see here. You didn't mention water. Yeah, well, I'm looking. See, this is the thing. Water seems to be a big issue for other people who don't live in the Pacific Northwest. Like, it falls from the sky 9 months out of the year. I'm sitting next to the Columbia River, right? I don't think about water in the same sense that a lot of other people do, even though, yes, it is a vital commodity known to man. And I understand that for a lot of people, it's probably one of the most important things that they can ever possibly think of. But here for me in the Pacific Northwest, water isn't the issue, right? Water is like, again, it falls from the sky 9 months out of the year. What am I going to, Gunner 499, thank you so much for the super chat. I'm from Chehalis, right on, thinking about helping parents build an ADU on the property. Would you do it sooner or later? Well, I wouldn't hesitate on it. As far as the lumber prices go, I don't think you're going to get it much cheaper than you are today. So if you're thinking about the lumber price incorporated into it, now would be a great time, in my opinion, because I just don't see how it could get much cheaper than it is today. Mill curtailments are running quite prevalent, and they are announced that they are going to continue in the curtailment until the beginning of the year. In fact, probably into the new year. So in my opinion, there is no real demand for lumber and the prices are suppressed. This can't last forever, right? And it's been this way for a while. So, if you're looking to buy the lumber, I don't think it's going to get much cheaper from here. However, all the rest of the costs that are going into it, those aren't necessarily coming down in a dramatic way. But I thought to myself, they are coming down some. Are they going back to where they were? No, right? But they are somewhat cheaper. Like, for example, I priced out some entry doors after an estimate that I had given over a year and a half ago, right? So I had, the lady comes in and says, I don't know if you remember me, but I talked to you a couple of years ago. It was a year and a half ago. And she says, I got these doors. Can you please reprice them and let me know what the new price is going to be? No problem. I said, it's probably, not going to be the same as what it was. And she's like, I understand. I priced them out. I kid you not. One of them was $25 cheaper and the other one was about $50 cheaper. Not quite $50 cheaper. And I'm looking at it, I'm like, I don't know what the difference is. As far as I didn't change anything about the doors. I didn't, there's no different hardware about it or anything else. It just came in at a little bit better price. And I thought, well, that's a little unusual. I hadn't seen that in any kind of broad, view of the entire building supplies. I saw it happen in lumber. I saw it a little bit in siding. I saw it in a few other things, but this is the first time I've seen it indoors. Okay. So is it getting cheaper? A little bit. Not great. Is it what it was? No, it's still more expensive than what it was. But it's not as bad as it was just recently. It's come down somewhat. Now, in that sense, I couldn't give it any kind of expectation that it's going to be dramatic or everlasting. Like at some point, that's not going to continue to fall. Like it's not going to continue to fall, and at some point, you'll probably find the prices start to move the other direction. How far out? Couldn't tell you. All right, thank you so much for the $4.99. And here's the other thing: when it comes to buying a house or building a house or owning a house or something, everybody always says, "Is this the time? Is now a good time?" And I'm thinking, that's the same question that people ask about planting a tree. When's a good time to plant a tree? 20 years ago. It's always 20 years ago was the best time to have done it. I mean, you are going to find there is times in history in which that somebody made a major purchase of real estate or property or something of that, and then suffered the consequences from that. The majority of the people who can deal with the downturn and get through it find themselves on the other side of that incredibly well off. Every single person that I know who has made it big, like has a lot of money, every single one of them did it with real estate. Like, I would love to say that it was all kinds of other things that made all the people that I know rich. They all did it in real estate. Every one of them. Why reinvent the wheel? The more real estate you have, the better. Lumber is such a small cost in the building of a house. You're right. It is a small cost in the overall building of a house. I totally agree with that. However, it's a major indicator of construction, of what has taken place within the demand of new construction, the demand for real estate, and also just the broader economy. If you see the demand for lumber increasing, it's generally saying that the rest of the economy is doing well too, right? Doing something as far as activity taking place within the economy. It's when lumber sales fall, that's where you have to be concerned. That's where the economy is slowing down dramatically, and it's evident inside of it. You think about it, if people were doing a lot of business, people are active, people are doing a lot of sales, they're getting a lot of money transactions happening, they want to participate in real estate. Like they either want to buy rental properties, buy a house for themselves, build a house. Something starts to happen when you have economic activity happening elsewhere, right? You start doing a lot of sales, you want to buy a house. So when the economy is doing well, you'll generally see the lumber market start to increase, or the prices or the demand for it start to increase. I'm looking at tax sale houses now. Right on, all-nighter. Great to see you here. The system is working exactly as the vandal in chief intended it. And see, that's an unfortunate way of actually looking at it, to be honest with you. To blame it on, the vandal or something of that nature will then basically dismiss you from trying to figure out or understanding the underlying economic forces that are actually playing out, because you are going to find the evidence and the reasons that it's the problem based on the vandal, right? Instead of looking at it for the underlying economic forces. Don't get me wrong, there is the issues that the administration has now created within the economy that people have to deal with, but to understand it from the underlying economic forces is going to give you a much better understanding of how you position yourself to deal with it. Because otherwise you're not going to look at that and you're just going to blame everything on the politics and then hope and wish and dream that politics will change so that it better suits you. Real curtailment when demand slows. There's a guy out here in a very small little rubber raft. They look like they're out there salmon fishing or something, and his girlfriend's coming up to meet him. I don't know if she's giving him lunch or something, but here, let me show you guys. She's right there about ready to go down. I don't know if you guys can see their heads bobbing over there, but anyway. That's a little boat to be out there on. Continuing on. Alright, this is a typical price reset and the rebalance of the supply chain. This is normal. Okay, well, if this is normal, how come nobody's really ever experienced it quite like this? If this is normal, just say, yeah. I don't think it's normal. See, there was a time that mills really didn't curtail that much. development. I mean, there's always curtailment, right? That's when it happens. But there was a time when prices would fall and the mills would just keep right on pumping out the lumber. They would just keep right on milling it up, and then they would stack it up, and eventually that supply would find its way through. Nowadays, mills will curtail right now. Like, I mean, if there is any kind of major drop in price, they're done. They're out. They quit. Right? That's not normal. That's only something that's really started taking place basically since the Great Financial Crisis. So, I mean, I guess it's normal now for the last, 20 something years. I mean, for people to experience, but that's not normal economics or understanding of economics taking place there. It's something totally different. I own a house and I am a minority. Am I a minority? Well, I guess. I mean, not a lot of people own homes anymore. All right. I thought this was a soft landing, the long drawn out recession. I don't know. I mean, isn't it a soft landing? I mean, unemployment hasn't risen significantly, and they're not exactly bailing out corporations. So, I mean, what's a soft landing? I mean, what's a hard landing? When everybody gets fired and then they have to bail out corporations. That would have been a hard landing, right? This is the soft landing. It's just like, yeah, you lost your $100,000 a year job, but you can go flip burgers. I mean, there's plenty of those opportunities out there, right? Soft landing. The hard landing would have been, there wouldn't have been the burger flipping job. That would have been gone too. Right? See, this is the difference inside of it. People were like, oh man, this is horrible. It was just like horrible for who? Not for the top 20%. Right? The top 20% are increasing their consumption. They're actually doing quite well. 80% of the people, all the people you talk to, they're suffering the consequences from this economy. But then again, this economy isn't really geared to benefit the 80% of the people. It's, the Cantillon effect has now separated the rich from the poor in such a dramatic fashion that there is really nothing that can be done to benefit the 80% of the people. The bottom 80% of household incomes, they're not, there's nothing there for them. Right? You can lower interest rates. Those people are already debt saturated. It's not like lowering interest rates is going to help the bottom 80% of people. So the idea of lowering interest rates to benefit the bottom 80% of the people is you lower interest rates and corporations go and start investing, and part of going into invest is to hire people. But if hiring people doesn't help them either, what is it that they can do? Nothing. There's nothing there for you. I mean, I guess they could actively give you like stimulus checks or something like that. I mean, there would be that, but that would really be sending the inequality on a rocket ship to separation. You start handing the poor money, they will blast that money. They will not invest it. They will not pay off debt. They will go off, especially if they're guaranteed to get it all the time. They will definitely not be making good decisions with it. And most likely what you will find is that the top 10% will end up with all that money. And the bottom will be going, oh, where is it? How come we don't have any? And it would be like, well, it's because you didn't pay off your debts and you didn't put it into a return on some sort of investment. You just blasted it on a good time. And when you blast it on a good time, all that money goes straight to the top. Yeah, there's really nothing left for the 80%. It's just like, other than showing up and serving the burger, there's nothing there. There's really nothing there left. You don't have good manufacturing coming back. It's not going to happen. There's nothing you can do about lowering interest rates to benefit the bottom 80% because they're debt saturated, and even if they got another job, it doesn't help. A good job sucks nowadays. There's literally nothing left for them. So as people say, oh man, it sucks for everybody. There's no way they can do it. It doesn't, and I'm like, you're talking to 80% of the people who are really insignificant to this whole economy now. The top 10%, they're the ones who are significant. They're doing 50% of the consumption. Think about that. Top 10% of households do 50% of the consumption. What do you think the next 10% are doing? I mean, it would be reasonable to think that if the top 10% of household incomes are doing 50% of the consumption, that the next 10% of household incomes would probably be doing 50% of the remaining consumption. Wouldn't that seem logical? So the top 20% of household incomes are doing something like 70 to 75% of the consumption. That leaves bottom 80% of the people doing the remaining 25 to 30% of the consumption. There is nothing there. You can increase their consumption by 10, 20, 30% and it won't make any difference. It really won't. But if you have a situation in which that the top 10% increase their consumption due to the fact that they are getting a bigger return on their capital investment, now you got something happening within the economy. Not going to work for most people. And that's where I think a lot of times people get very frustrated with my channel and a lot of the things that I say, is because I don't give them any kind of hope that politics are going to come in and make the situation better for them where their day job is going to be enough. I already recognized it that a long time ago that my day job was never enough. I couldn't figure out why. Why isn't my day job enough? Right? It's because it's not enough. It's just simply not enough. There's nothing that you can do to make it enough. I mean, you can cut back on every expense that you have. You can only buy the necessities. You can be incredibly disciplined with everything that you got going on, and it's still not enough. Right? The income is not enough to make the payment on the house. Not at these levels, not at these interest rates. It's not going to happen. But the top 10%, oh, they're buying into their luxurious experience. The luxurious real estate market seems to be doing okay. Right? I mean, real estate market for the top 10%, all cash buyers. See, this is where I think a lot of times it gets very frustrating for a lot of people to try and understand economics, or even understand the position in which that I am trying to share, that I have discovered from a working class point of view, bringing in the macroeconomics and then trying to figure out what it is that I needed to do to get through this system. And when I realized what it was going to take, it's way more than anybody was willing to do. Like, working this YouTube channel, I worked it as if it was another job. See, people think, oh, what am I supposed to do? Work 2 full-time jobs? Probably, yeah. Yeah, it's probably going to take 2 full-time jobs, and your wife working a full-time job, and she probably has to have a side hustle as well, doing some sort of crafts or whatever it is that she's doing and selling online in order to do it. That's what it's going to take. Now, we can pretend that it's going to be able to be fixed by voting in the right person and then allowing ourselves to then say, hey, man, it's their fault, right? That's easy. We could do that. Is that going to help? Is that going to work? I don't see it happening. Uh-oh. Stay with me, guys. We're almost done here. All right, let's cruise down here to the bottom. 200 people watching with 55 likes. I was Stacks Silver in 1980. I made a small fortune because the Cole brothers, squeezed the market. Simon is ignorant when it comes to silver. Really? Is that so? Here, Bob, you know what? Let's make it so you never have to worry about it again. No, that's okay. Silver, that is so funny. He's probably talking about back when the Hunt brothers, right, were trying to manipulate the market, or they weren't necessarily manipulating the market. They cornered the market, which ended up being a manipulation in it by buying up the futures contracts on margins and stuff like that, which ended up driving the prices really high. Especially when they did the margin call, it was just like, man, that's it. There's no way they can hold on to this anymore, and they ended up having to sell it all off, which dumped out. Now, that little situation right there, although it was an incredibly obscure market manipulated tactic that really should never have occurred, it did drive silver up to $50 an ounce, and we haven't hit there yet. Now, in 2011, it came very close, and right now it's getting there. But the understanding that the silver market is probably here's the problem that I think silver is going to end up facing at some point in the future. is that there is simply not a lot of silver out there, right? There just really isn't. And when you think about the silver manipulation game that is being played right now with 150 paper ounces of silver for every physical one that is sitting out there on the shelf, it really gives a lot of opportunity for silver to just go right through the roof. If all these paper silver contracts were to be cashed in and the silver physical item was purchased, like, you cash in the paper and buy a physical, who knows where silver could go through. In fact, I would believe it could go above the price of gold. I would not be surprised at that at all. You have to think, silver is probably the number one most vital commodity known to man. There is like every single electronics, communications, medical, money, everything is all circulating around silver, but yet it's an unloved, unnoticed, unappreciated commodity that is selling far below what it should. Right? I mean, definitely far below the gold ratio. I mean, you think about it, they pull it out of the ground at 10-to-1 ratio to gold, but yet it sells at what? I don't even know what the gold to silver ratio is right now. 80? 100-to-1, pretty close to 100 not quite 100-to-1, 80-to-1, somewhere in there. It's just ridiculous. It shouldn't be like that. It should be much closer to that 10-to-1 ratio. And so when I think about these things, it literally puts silver in a position in which this commodity could just absolutely just explode in value and opportunity for people who are holding on to it. It can just do a number. Right? I mean, just beyond. You really think about it. I mean, they mine like what? 900 million, like less than 1 billion ounces a year, right? Let's just say, I don't even know what the exact figure is, 900 million ounces a year. If in like 50% of that goes right to industrial use. So there's really only like what, 450, 500 million ounces available for people to buy. And when you think like, okay, so every single American, through 360 something million Americans out there went out and bought just 1 ounce of silver, just one, it would completely eat up the entire world supply. I mean, we're not talking Canada, Mexico, Russia, India, China. If everybody in the world decided that they were going to go out there and just get 1 ounce of silver, it would completely destroy the entire production. There would be nothing left. And the price would just absolutely explode because there's somebody out there who wants to build a phone or a computer or something, and they need a little bit of silver, and they will pay any price for it. That's the situation that silver is now facing. Right? But at the end of the day, it doesn't serve for any other purpose that I could find other than an insurance policy away from the third-party claim. Everything else is a wish and a hope and a dream. Right? Praying for the manipulation to end. But if you look at it as an insurance policy away from the third-party claim, it works perfect. It works every single time. All right. If you don't own, you own body weight in silver, you're sleeping. Okay. Calling silver on the dice. So anyway, I guess am I still ignorant, Bob? Am I still an ignorant individual? Alright. We are the commodity. Yeah, well, if you ain't paying for the product, you are the product. Alright, what do you see the bottom of the lumber market price being around? Right now, this is it. Like, it doesn't get much cheaper than $550 per thousand. Anything under $550 per thousand, and the mill curtailments just light up. Right? Even now, we had like lumber futures close at less than $600 per thousand on the September contract. Here we got the November contract at like, I don't know, like $570 or something. None of this is very profitable for the mill. So the curtailments are going to continue. The bottom, like, this is it. This is like, I can't see it getting much cheaper than here. I mean, could it crash? Absolutely. I mean, it could crash down to 300 per thousand or less or whatever. But that's going to be so short-lived. Like, I just can't imagine that. And when you have the idea that the financial market is going to be less restricted going into the future, does that really give an opportunity for prices to come down? Or would that start to encourage people to go out there and participate in the real estate market if the financial market is getting, if the financial conditions are less restrictive? Does it seem like it would get worse or better from here? Like, do you think there would be less home starts with a financial restriction that is less, or do you think there's going to be more housing starts? Like, just think about it. Once they clear out that inventory, builders are going to want to build. If interest rates start to come down, if the financial conditions are less restricted, that inventory will eventually find its way into the market, into the hands of the buyers, and when that does, demand's going to increase. I just don't see it any other way. Like, that's the way I see it. And so I don't think lumber prices are going to get much cheaper than where they are. They've already been suppressed for quite some time, and again, like, I don't see them getting any less than this. Not for any length of time, you know. 2 years from now, I will trade my barber quarters for a new Lexus. And on goes the Cantillon effect. Bob, you fell right into it, buying into that luxurious experience, separating yourself from the poor, and eventually creating the underlying economic forces of the demise. Dun, dun, dun. Good for you, man. What I would do is I would wait 2 years, take that money, deploy it into something that is going to have a return on investment, because that's what I'm planning on doing. I don't buy into luxurious experiences. You buy into that Lexus, you are literally creating the problem. You are the problem. Right? Now, don't get me wrong, it's human nature, and everybody wants to enjoy their money. Everybody wants to increase their income. Everybody wants a nicer house, nicer car, nicer clothes, nicer food. Everybody wants the nicer stuff, and the moment that you start falling into luxuries, you start creating the separation between the rich and the poor, because the domestic manufacturers are going to find out that they can't compete against the foreign production that's coming in, that everybody is loving and buying and enjoying, because they want to enjoy that luxurious experience too. Okay? That's what happens. That's what happens. I want my Bitcoin to go way up so I can be driving Lambos. Separation between the rich and the poor, guaranteed. Right? And it's like, that's why I have very little doubt in my mind that it's going to happen going into the future, that there is no reversal to the inequality, just simply because of what Bob said right there. I mean, that is proof of it. That is human nature. Let's get more money and enjoy that money. The moment that you do it, separation between the rich and the poor. And since we don't want to internalize that as our fault, instead we'll blame something else. It's the politicians, greedy corporations, whatever. What time is it? Dope. I gotta get going, guys. Alright. Man, do you have a life insurance ties? I'm looking for someone for a biz op. Oh, Mary. I thought I said man. This is Mary. With lumber at the bottom, I'm gonna make a wooden Lambo. Yeah, there you go. Alright. It's like system we live within. Walrus. Alright, Lennar home sales down 49% year over year. Yeah, that will eventually change. See, that's why I follow the deterioration to see when it's like, when the deterioration is like slowing down. That's the bottom, right? Like, I'm looking at that myself. It was like sales are down in every way, both real estate sales, lumber sales, activity is all down. And I'm thinking, man, it doesn't seem to be falling worse. Like, it'd been dropping, and then it got down to like, okay, it's really bad. But it doesn't seem to be getting worse. Is this the bottom? Financial market's getting less restricted, mortgage rates coming down. Most likely you're going to see that activity pick up. Give it enough time with lower interest rates, or lowering interest rates going into the future. The longer that continues on, the less restriction in the market, the more activity starts to pick up. We may be finding the reversal happening. Are we there yet? Absolutely not. But are we at the bottom? Could be. Don't know, right? We have to see. I don't see it, or hear it deteriorating anymore from this. But it could. Not saying it is. I think we're close to the bottom. I think that the financial markets will probably become less restricted going into the future, especially if they signal or jawbone future rate cuts into the mainstream media narrative. Oh, for sure, that it would definitely lower, make the financial market less restricted. And then if you continued to pump the credible threat of tariffs, oh yeah, that will raise the inflation expectations and start raising the neutral interest rate. Perfect combination for an active economy that nobody would recognize happening. But then again, 80% of the people aren't that important. It's really the top 20% that they're really focusing in on. All right. All right, you guys are awesome. Thank you all for being here. 203 people watching with 69 thumbs up. Thank you so much for hitting that thumbs up button. Thank you for joining in on this channel and having the conversation by commenting. Hitting that like button and sharing the video is the best way to get the YouTube algorithm to support the Uneducated Economist and getting the view count up so that we get more subscribers and essentially more ad revenue for me. All right, Uneducated Economist, you guys let me know. Oh, one last shout out for those who happen to be in the Astoria area. Tomorrow, Saturday, the 20th, between 10 a.m. and noon, I will be down at Pier 39 at the Coffee Girl, hanging out for a meet and greet, conversation, hangout. So anybody who's in the area and is interested, you should come check it out at Pier 39, Coffee Girl, coffee shop there between 10 and noon. All right, Uneducated Economist, you guys let me know. What does that say? It says, all right, Simon, my mother is in Portland, close to you, trying to build a house. Can you help her with lumbers? Well, Mary, probably not in the Portland area because the distance from my location to her location is just too far away to make it efficient and cost effective. But if there's any questions or anything that I can help out with, if you have any confusions or ideas of what it is that you need to do next, I'd be more than happy to have a conversation with you. So, yeah, just send me an email and we'll schedule a phone call or something like that. All right, Uneducated Economist, you guys let me know.